Hi everyone, in this video, I want to talk about where should you put your 100,000 pesos this 2020. So if you want to know more, where should you invest it? Check this video out. Hi guys, this is Marvin Germo. If you're new to this channel, please subscribe and hit the bell so you get updated every time I come up with new content about investing, about trading, about how you can reach your dreams of financial freedom by using investments to work hard for you. So if you get any value from this video, subscribe, smash the bell, and stay till the end of the video so you get all of the tips for the top places for you to put your 100,000 pesos. Hey guys, so it's January 2020 and it's still the start of the year. It's still a good time for me to be able to share insights on where should you actually put your money. And the reason why I'm making this video, the whole context, so at least you know, I've been getting a lot of messages. As you all know, the content that I've been making is based on the questions that you've been sending out, the comment section, all of the things that you have been asking me. And I've seen a common denominator in Facebook and YouTube that all of you guys are asking, if I have 100 pesos that I want to invest today, where should I put it? Meron akong $2,000. Saan ko siya pwedeng i-invest? That's why I'm making this video because I've seen the common denominator for a lot of people is 100,000 pesos, where to invest it for this year. I'm gonna make another video also probably a 10,000 peso investment. Comment below if you like something like that, where to put your money if you have 10,000 pesos, if that's something that's interesting for you as well. But this video will center for 100,000 pesos. Now, here's the thing also. The way I will segment it, it does not mean also that the 100,000 will be placed exactly on an investment, but it's for you to be able to yield a better result on your money as well. So tip number one is basically this. If you have any high interest debt, my suggestion, you pay that off. You put that 100,000 and you pump that in to be able to lessen your debt. Please remember the technique in debt repayment is actually this. You put in as much cash so that your interest rate for the next few years becomes lower. The technique there basically is if you put a lump sum, it lowers the principal that you're paying off from. So the multiplier for the interest rate that you will pay off also becomes relatively smaller. So people will say, sayang naman, I could invest that in the stock market, I could invest that in the real estate market, I could invest that elsewhere. The thing about that is this. You have to figure out also where you're good at. You have to figure out also in terms of how you are earning. What does that basically mean? It means this. If you are paying, that's why I said high interest debt. If you're paying 7, 8, 9% on that debt, and then what you are earning on a particular investment, say is just 4, 5, 6%, then that debt, you are actually losing money. It may look that you're making money from that investment, but if you are paying out more on that interest, then it doesn't make sense. But if it, again, there are some investments that will make more than the debts that you have. If that's the case, then keep the debt. But I'm just talking about debts that are high interest. These are debts that won't perform, that will cost you more than the investments that you're getting. So tip number one, pay off those high interest debts first, because here's the thing also. Your investments, there will be years where it will do well, there will be years that it will be bad, but there's one thing I know for sure. On those bad years, you are still paying that high interest debt first. On those good years, you're still paying the same amount. Paying off your debts will eliminate that variable that at least later on, 10, 15 years down the line, you have no debt, you are debt free. And that's my biggest suggestion. Top up, double down, put up lump sums on those debts as well. So this might not be the most sexy recommendation, but it's the right thing to do. It's the most sound thing that I could ever tell you. This is the biggest advice that I could tell you. Pay off your debts, put a lump sum, put that 100,000 in right here, right now. Second tip, not again one of the most sexiest types of tips that I'll give you, but if you don't have an emergency fund yet, put in the 100,000 there. If your emergency fund has not given you a larger buffer yet to protect you, should you get sick, your family member gets sick, you lose your job, similar to what happened to the Taal volcano. Right now, a lot of people are losing items, losing stuff, a lot of properties get damaged, a lot of businesses got hit. If you don't have an emergency fund, then you are in trouble as well. By the way, I don't know how I'll do it, no, but I think I'm going to Taal to give out some items as well. Comment below if you want to help out. Comment below if you want to donate to Taal. I'll try to physically go there and give something out, but definitely I'll be helping out monetary wise as well. If you're the person who wants to help out or you're doing something already for Taal, just comment below and I'll try to do something also in terms of helping, because I really believe that I want to use this channel also to help other people. I want to use this channel as a platform that we get to use whatever resources that we have also to be a blessing to a lot of people as well. So uh, build that emergency fund, because you never know when an emergency will happen. And I've made so many videos about emergency funds, but I just wanted to share this. Another way for you to be able to do this is just to segment it. No, it doesn't have to be 6 months. It doesn't have to be 1 year, but it has to be at the point where you become comfortable with the buffer that you have, especially if you don't have any fixed income, especially if you're an entrepreneur, you're a salesperson, you're a commission-based individual, you're a freelancer. Better put it to a level where you have a large amount of buffer that will protect you, that will shield you, that will cause you to somehow work well in spite of having the fear of you don't know what you will earn 5, 10 years from now, because your work is freelance as well. That's tip number 2. I hope you guys are learning. I hope you guys are getting a lot from this. Comment, I'm learning. If this is something that's helping you, the first 2 tips are not the most sexy, but please remember, it will progress from there as well. So tip number 3, my suggestion, I've made so many videos about this. Just open an MP2 account. An MP2 account, what I love about Pag Ibig's MP2 is that it locks you in for 5 years, meaning you're forced not to touch the money, meaning also it will literally be for savings. Because please remember this, the problem of Filipinos is not just that kumikita sila ng pera, it's just that kumikita sila ng pera, but they're actually spending a lot more also than what they're making as well. So the reason why I'm saying this and the reason why I'm sharing this to all of you is Pag Ibig MP2 is 5 years, then hindi lang yun basta-basta 5 years. The rate of return there is much, much higher still than what you will get in time deposits, in bonds, in some common shares, in some preferred shares. Plus, it's actually tax-free. So that's what's amazing about it. It doesn't just force you to save money, it doesn't just force you to put in money on a regular basis, but it will give you a higher rate of return. Plus, it will give you something that's tax-free that you don't have to touch for a very, very long period of time. And eto pa, if you put your money in Pag Ibig's MP2, guess what? You're helping Pag Ibig have more funds to loan out to other people who want to get houses. And we're actually helping other Filipinos get houses as well. So if you're looking at the helping side of it, the social impact side of it, that's what Pag Ibig does as well. And I've been late in the game now. I've been talking about it a lot more now because I just fully understand it. Kasi what I thought before was basically this: there's a limit to what you can put for the Pag Ibig's MP2. But what's interesting about that is you can put whatever amount that you want as well, and you will get a larger amount of return from all of it. So that's tip number 3. Tip number 4, this is I'm trying to escalate the risk even more. No? So please remember, from here, the risks are gonna start piling up already. Tip number 4 is you go to an equity index fund. I really believe this. If you are a long-term investor, studies have shown this already, and this is also for both Philippine and U.S. markets. You can invest in equity funds for Philippine markets. You can invest in equity index funds for U.S. markets as well. Studies have shown it already that equity index funds have dominated other active mutual funds as well. So if you want to have exposure to the stock market, you want to have exposure to equity funds, but you don't want to pick the stocks that you want to buy, you don't want to select them, you don't want to time them, you don't want to know how to position size, how do I allocate them, how do I actually nitpick which particular industry should I put my money. Just put it in an equity index fund. I highly suggest it. I really believe that this is one of the best investments for people who do not have the time, who do not have the acumen, who do not want to study the stock market very well, who don't want to do fundamental analysis, who don't want to do technical analysis, but want to earn, want to beat inflation, want to beat other mutual funds out there. And please remember this, I'm saying this not out of concept, I'm saying this because I've seen it happen. Index funds will beat other actively managed funds. Numbers are backing it up as well. And here's what's interesting about this: if you invest in an equity index fund, you can be passive. You can be you don't. Here's the thing: the equity index fund. Let's just put it in from a Philippine perspective. The Philippines has 30 stocks in the Philippine Stock Exchange Index. That's what the equity index fund is tracking. Those stocks are recalibrated every 6 months. So ibig sabihin nun, every year, twice a year, you get to recalibrate the PSE, you get to recalibrate the components inside the PSE. One thing I can assure you is this: since they're recalibrated, if you are number 29 and you are number 30, if you don't form the list anymore, number 31 and number 32 will take your place. And here's the thing: the biggest risk also not the biggest risk, but one of the risks when you invest in the stock market is you invest in a company that will close down, you invest in a company that will go bankrupt. That's when probably most of your money won't return anymore to you if the company goes bankrupt. Here's the nice thing about the index fund or an equity index fund: there will never come a point in time where the company will go bankrupt. There will never come a point in time where the company will close down. There will never come a point in time where you will see the company lose money and go to zero, because all of the companies in the index funds are all recalibrated every 6 months. So that's what's interesting about it. That's what's nice about it. You are a passive investor. You don't have time to watch the markets, but you want exposure to equities. Go. Equity index fund is my recommendation, is my suggestion. Number 5 is this. The stock market still. I highly suggest the stock market to everyone who want to make money for the long term. And I'm saying this because it works. And please remember, you don't have to be a master analyst. You don't have to be a master technician. Some of the things that will help you basically are common sense as well. You just have to play for the long game. And my suggestion, I've been saying this over and over, if you are passive also, you don't want to be a technician, you don't want to use fundamental and technical analysis, just buy stocks that have dividends. So if I'll flip this tip up, don't just, tip number 5 is not just investing in the stock market, but investing in the stock market with stocks that have dividends that are increasing, dividends that are growing, dividends that are consistent. You buy the company who gives you consistent dividends over a regular basis. You buy a company who gives you dividends that are growing. You buy a company that whose dividends is fairly steady, no, that it doesn't drop, meaning the company is good. Please remember this: dividends basically are, in all intents and purposes, dividends are excess income. Dividends are basically what the company gets on top of its earnings. So please remember, companies have sales, but from the sales, they have to pay taxes, they have certain expenses that they have to also disburse. If you remove all of that, they still have money that they still need to somehow use for their expansion, use for their operations. After they remove all of that, that money is left, and that's what they can give out for dividends. What's interesting about a company that gives out dividends, think about it. The reason why they have extra money is because they're actually good in earning. But not just that, the reason why they have money still is they've earned massively and they still fulfilled already their growth requirements. Meaning, if I'm pure gold, I wanted to build 30 supermarkets next year, I was able to fulfill that based on the money, pero may natira pa rin, and that's what they're giving out to investors. Buying dividend stocks is one of the safest ways for you to be able to make money in the market for the long term. However, please remember this. So basically, equity funds and dividend investing have volatility attached to it. So what does that mean? If you're investing in them, of course, over the long term, they will make money, especially if you buy good index funds, especially if you pick good stocks that have dividends. But you must be willing to survive the volatility, meaning there will be days, there will be months where the stock prices are being hammered down. There will be days where it's been pushing down and it's going down as well. If you are investing into this, you have to have the stomach to not panic when you see stocks drop. You need to have the stomach to handle it when you see your portfolio also drop. And here's the thing: people always say that the saddest thing when you start investing is to see your portfolio drop. I'll beg to differ also. One of the things that scare people is this: they've earned 50% only to see their earnings drop to 25%. Yun yung isa sa malaking pinanghinayang ng mga tao, yung concept na pera na naging batupad, that you're losing money that way. So that's what I'm actually saying. Dividend investing is very, very amazing, especially if you're very, very passive. Dividend investing is very, very good if you want to somehow make money in the markets for the long term. You need to learn, though, the concepts of fundamental analysis. You need to know how to know if the dividend yield of the stock that you're buying is very, very good as well. So that's tip number 5. So last 2 tips. Tip number 6, it's still the stock market, but it's stock market trading. Please remember, the difference between dividend investing and trading is basically this: dividend investing, you're coming in as an investor. For trading, you just want to buy low, sell high. You just want to buy stocks that have rebounded and are going up again, and then you're picking them up. If you're trading the markets, you want to buy stocks that are reversing as well. You want to buy stocks with your end goal is just to sell it later on. For dividend investing kasi, and ETF investing or index fund investing, you can buy them and hold them for a stretched period of time. But for trading, what's nice about it and what makes it very, very unique and what makes it a good value proposition for you to be able to make money is that you can make money over the short term. You can make money over extended periods as long as you know how to follow trends, as long as you know how to pick, select, and you can time companies that are coming in that you know that from a downtrend it's now reversing and it's now starting to go up. Those are companies that you can start to position into as well. So I highly recommend stock trading, but please remember this: it will position you also to a higher degree of risk. It will position you also to a higher degree of anytime you want to earn more, there will be a higher degree of risk. But also, in your end, that's where skills will already pump in. That's where skills will also come in already, where everything will be skills based already. The amount of earnings that you will get is basically proportional to the amount of skills that you put into it. So please remember, tip number one: paying off your debt doesn't require skill. Tip number two: emergency fund doesn't require skill. Not as much skill. Setting an MP2 account doesn't require much skill because you just have to put in money on a regular basis. Putting money in an index fund doesn't require much skill as well. Dividend investing requires skill because you have to analyze and know which stocks give out good dividends. You need to know fundamental analysis. But more so for stock trading, you need to be very, very good. Not very, very good, but at least you need to know what technical analysis is. You need to know how to pick, you need to know how to time the markets based on what the charts are telling you. But I'm telling you, and I'm saying this, it's one of the most fruitful things that you could ever do. It's really, really fun to be able to analyze companies via the charts. It's really, really nice for you to be able to analyze, knowing when to come in and when to come out. And if you're trading the market, it's all under the adage that you don't have to be in the market all the time. You only have to be there when it counts the most. That you don't have to ride the long-term effects of the market, but when signals come, you start selling as well. Just a quick plug, no? The links are down below for fundamental and technical analysis for the sessions that I have. If you want to learn more about dividend investing and stock trading, those are the courses for you. It's all in the description box. Also from the books that you can order via Shopee, they're all in the description box. But just so you know, the cities where we will do the seminars from: Taiwan, Singapore, Dubai, Tokyo, Auckland, New Zealand, Sydney, Australia, Singapore, Doha, Qatar, then of course Manila, but they're all in the description and I hope to see you guys there. Tip number 7 on our very, very last tip. I hope that up until this point you're still here. Comment below if you're still here, hindi pa kayo malas, you're still with me. You have to start your own business, and I really believe doing your own business is an amazing thing. It's one of the best ways still to make money. Your 100,000 will go a very, very long way, especially for businesses that are small scales, some businesses that don't require as much capital as possible. Of course, for 100,000, you cannot start a fast food chain, but probably you can start a very, very small food cart. Perhaps you can start selling in a mercato. Perhaps you can buy some products. You can buy some products that are cheap in Divisoria, that are cheap in Baclaran, that are cheap in Landers, that are cheap in SNR, or some sale items that you can probably sell later on in Shopee and Lazada, or you can buy particular items that you can sell via Instagram, that you can post them online and then just sell them as well. Or if you are doing something that's service related, meaning you are an accountant, just buy a laptop, buy a decent internet connection, buy something that will allow you to be able to get clients as well. Or if you're a photographer, of course you need equipment, buy the cameras that you need. You are an editor, buy a laptop. You can do a lot of online jobs. The capital lang that you need to spend on is a laptop. So yun, there are so many businesses that you can do for 100,000 pesos. But please remember this: it's all skill based. People are asking me what's the best business for 2020. It's not about what's the best business. It's about what are you good at. Where are your skills? What something that you can bring to the table? Because people who will make money in business, it's all dependent on how much skill you bring into the game, but not just skill that you have. Your skill will bring value to people, and the more value you bring people, the more money you will get as well. And that's how you will make money, and that's how you will maximize that 100,000 pesos as well. So I hope you guys got a lot of this, and that's why I'm trying to hit a lot of people here. This will hit different facets, different types of people. If you're a person who has a lot of debt and are paying massive amounts of debt, pay off that high interest debt first. If you don't have an emergency fund, go with the emergency fund. If you're someone who's relatively low risk but want to get a higher rate of return, go for that MP2. Go for that MP2 investment. If you are someone who wants to take in more risk, then invest in index funds. If you want to get larger amounts of return but need to study more, then that's where you go dividend investing, stock trading, or you get your own business. So I guess that's it for now. Again, inspirational quote for today: the best time to actually invest that 100,000 is today. Do not wait 5, 10, 20 years from now, because there's what you call the time value of money. Your money not invested is losing for you. Your money not invested is you failing to build the skills that are required for you to make money. And that's why I keep hammering it to people that you need to start right now, so that you develop and build the right skills that will help you make money, not just now, but in perpetuity as well. Kasi even if you lose money, guess what? Yung skill na yun, di na mawawala sa yun eh. Even if you lose money on an investment, on a business, the experience that you get from there will be priceless, and you can pivot and you can use that to help you make more money later on. So I guess that's it for now. Marvin Germo, comment below if this is something that's helping you, and if you believe this is something that's giving you tremendous amounts of value. Super appreciate it if you guys could like, subscribe, so that this gets pushed out more to more people uh, who want to learn more about business and investing as well. And the reason why I've been doing 1, 2, 3, 4 videos a day on YouTube, because I really believe that this is something that's changing a lot of lives. This is something that will help a lot of people. That it's time to change the narrative. That we don't tama na. It's time that we stop listening to politics. It's time that we start listening to something that will help you make money. It's time that we don't just focus on something that will entertain us. Tama na showbiz. It's not wrong listening to showbiz or watching showbiz channels, but I want Filipinos naman to spend a lot of time not just entertaining themselves but educating themselves. I'm not really an entertaining person. Comment below if I'm entertaining, but I don't think I'm entertaining, but my main goal here is to educate you, because you know what? The rich spend more money on education than entertainment. And if you believe that you are rich, I hope that you spend more time on education than entertainment as well. So this is Marvin Gilmore urging you that you are rich right here, right now. And I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.